Welcome to TMS Insights. Jeremy and Ben bring you what will be the last TMS Insights for 2021. And Ben, it's been a good year for everybody concerned, despite a lot of obvious headwinds and headlines, really. But equities have had a good year.
Yeah, it's been a long year. I'm looking forward to a bit of a break, but the market's been amazingly resilient this year. There's been so much bad news constantly out there in the press, not just about COVID, but China and all sorts of things, and particularly interest rates has been a big talking point. But the market has climbed that wall of worry and delivered a pretty reasonable return for the 12 months, and shapes us up for it's going to be another interesting year next year. I think it's going to be a bit of a changing of the guard potentially.
I think so, but just picking up on something so recent as last night from Jerome Powell, the Fed Reserve Chair, who said there will be 3 rate rises we expect in 2022 and 3 in 23, which is news for the market. Now, in any other day, that would cause the market potentially to sell a little bit. It shouldn't be brand new news to people who follow these things, and probably wouldn't have been to us. But nevertheless, a reaction on the downside? No, the market's rallied on that news, didn't they?
I think the Nasdaq was down 1% before the dot plot was released, and it rose to up 2% by the time he finished his press conference. Which, and that the Fed certainly has. To me, he's changed his tone where he's now recognising there is a real risk that inflation becomes more structural than the Fed initially expected. And it sounds like a key area that they are watching is the employment and wages story in America, because that's where, you really could. At the moment, what is creating inflation, particularly in the States, he sort of said it's very narrow. It's things like rent and car prices and knock-on effects of supply chain disruption. But the concern is that a lot of employees go to their bosses, want salary increases, and you get a widening of that base.
And we've seen it here. We've had train strikes, bus strikes, teacher strikes here, and we haven't had those for many years, in some cases decade plus. So it does reflect, and these things, this is that changing language, and we would have been saying this in recent months to clients, even though Philip Lowe, the Australian Reserve Bank Governor, has not changed his tune yet. He spoke this morning. It is true to say that inflation is a hard thing to sort of contain or actually define. So expect that it will be around, and we do actually want people to be thinking about what happens when the rate cycle turns here. And it won't actually cause ridiculous panic or anything. It's just something to be aware of. It's just been too low for too long.
Well, I think that the reaction in the markets last night tells it all. Where the market is onto this. It's not going to be a surprise to anyone when rates start going up. I think it's actually a healthy thing that we do try and normalise rates, and hopefully earlier than the RBA is saying, because I think 2024 to me, get bubbles. It creates bubbles in asset prices if you leave them for too long. But look, it's going to be next year. Depending on what happens with Omnicron, should be the tipping point where conditions are normalised and the world moves on from COVID and we start to see a more normal environment.
And we've seen a bounce back in earnings here. We've seen a year of a lot of M&A activity, so lots of takeovers. We've seen all kinds of mergers and demergers, so it's been one of the busiest years on record on the mergers and acquisitions front. That leads us to talking about a couple of things that have been relevant in recent times that are going to impact soon in the infrastructure space, namely Spark Infrastructure, which it's game, set, match there, and the money arrives on the 22nd, which is next week, and then Sydney Airport, which is a March proposition.
So the ACCC signed off on that, which was, I think, one of the last sort of things that they needed. So I don't think a timetable's out yet, but it's looking like late February,
March. I'm planning on March.
So that's not $8.75 in cash. Interesting, it's another interesting part of the market where we've actually seen a big re-rate in infrastructure stocks, even though what we're talking about with interest rates.
Well, you mentioned APA today has had a massive 2 months, and after a pretty ordinary year.
So there's still a lot of demand for these assets. I think we can see out there, and I mean, the deal boom that has happened this year has just been phenomenal. From everything you read in the papers, the lawyers are the ones to listen to because they work on these things for months before it gets denounced, and they're saying that this will continue well into next year. They've been pretty on the mark. I remember reading some saying, you've got no idea what's coming. So I think it's going to be another M&A frenzy.
And that CSL deal, I want to talk about CSL, had been years in the planning. So do you want to talk us through that? Because that's a big stock for a lot of people.
Yeah.
And there's some more stock perhaps coming their way.
Yeah, so that's CSL's taking over a Swiss biopharmaceutical called Vifor, which specialises in treatment for particularly kidney diseases, things like renal failure, etc. The CEO of CSL spoke about they've been monitoring this business for years, he said.
3 to 5 years.
3 to 5 years.
And he's been in the role 8 years, Paul Perreault.
So almost his entire role there. And they nearly launched a bid for it earlier in the year, it sounded like, and then they've gone away and done more work and come back. So certainly, CSL is a business that has acquired maybe once every 5 years, and in hindsight, they've all worked beautifully. And I think, they're not serial acquirers for the sake of acquiring. No. So
they do like big ones, and Securus was a big one. And we've been talking about how that's become such a big part of their business. And the one I think I've been way back was ZLB, which is blood plasma, and that put them into the stratosphere basically.
Completely.
And they don't talk up their story a lot.
No.
But they're very hopeful here.
I think so. And look, the thing that's happened is they've had to, under Swiss takeover law, you have to have an immediately fully funded bid if you make a takeover bid. So that's led to a very rapid capital raising. It's actually the biggest capital raising in Australian history. They're raising $6.4 billion, I think it is. That's just been announced this morning. It'll be done at $273. And clients will be able to participate in a share purchase plan of up to $30,000 at $273, which won't be until February next year.
That's right.
And we'll be coming through with advice probably late January and looking at where the share price is trading.
So they've got the money to actually enable the deal. They're also then offering existing shareholders the right to add to their stock price. Noticing also the stock price has adjusted today to pretty much that placement price.
Yeah, because this was a huge raising done at a time when there isn't a lot of liquidity in the market. A lot of people have already,
clocked off for the year. Yeah, that's right.
It's had probably a bigger impact on the share price than it normally would, I suspect.
Yeah, I think you're right. Yeah.
But look, I think this is we're not going to be experts on renal failure firms in Switzerland, but I think you've got to back the management.
Well, they've had a great record, and Brian McNamee as chair has been as long in that company as anybody in any Australian company, just about, except for founder-led companies. So he's right up there in terms of a quality chairman who knows the business. So back them, and that's proven well in the past as well. Looking at the end of the year, things do go a little quiet, as you mentioned, Ben, but not always in the northern hemisphere, and that's what can keep things bubbling along here. And although we like to have one foot in the holiday camp, we're always got one. The office, for benefit of clients, of course, is always staffed during the business days when the market's open. But we're always watching things because things can change in January, can't they?
They can. We have seen January's been in recent years been a bit of a dicier month. Again, I think it's a liquidity thing. There's often a lot of people away, so it doesn't take a big news announcement to see much greater swings in the market than we would normally see. But we are also coming right now into the strongest period of, historically the market, the so-called Santa rally, where this is a period from mid-December through to sort of early January where the markets typically are quite strong. So we'll see what happens. I think, there's a lot going on, obviously, at the moment. And there's a lot of things that could swing markets around in the next month or two, but you just got to keep looking through it.
Keep us busy in 2022, I know that for sure. But we're certainly looking forward to a bit of a break, and hope all our clients who are so valued by us, are having a great Christmas with your friends and family, and we look forward to catching up again next year. Happy Christmas and a great new year to all our friends and clients. Thank you.